And gold is telling us that, and silver. And many people, unfortunately, especially the middle class, are going to be left penniless. Yes, they'll have balances in their bank accounts, in their savings accounts, in their holding of government bonds, in their state pensions, but it will buy nothing. And that's why you really do need some gold and silver to protect you financially. And it's still not that late to do it, in my opinion. The primary reason to own gold is that it maintains value, especially during times of political, economic, and currency-related crises or crisis. In short, it operates as insurance that includes, but is not limited to, insurance against political uncertainty and economic disorder, as well as insurance against the whims of central banks and their tendency towards money printing.
Once again, certain asset prices are setting new records. Few people could have predicted that gold would reach $4,300 an ounce just a few years ago. As investors turn to physical money instead of paper assets, silver is also rising quickly. While central banks add liquidity to already overheated markets, inflation keeps eroding purchasing power, according to seasoned investor Mario Innecco. Anyone who is aware of the long-term harm caused by fiat money shouldn't be surprised by any of this. He remembers how gold was once derided by the mainstream media, such as in the 2004 Financial Times, which called bullion outdated. That prediction has not held up well 20 years later. Innecco claims that in order to maintain the public's reliance on fiat money and the banking system, financial elites have purposefully suppressed gold and silver. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing. Share your thoughts on the market in the comments below.
It's a very significant day, at least for me. And why is that? Well, because a couple of years later, in 2004, when I was already a staunch sound money proponent, or a gold bug, if you want to call it. I don't mind being called a gold bug. I was going to work, and I used to work in the city of London as a futures and options broker in the government bond market, not in gold and silver, even though we did trade a few gold and silver futures for some clients. But anyway, I was on the platform around 6 a.m. in the morning, waiting for my train. And I used to buy the EFT, and I used to turn to the editorial page. I don't know why, I just like turning to the editorial page first thing and read what they were covering. And this came up, and this was April 16th, 2004. You can see here that I wrote the date. And it says, going gold. The pointlessness of holding bullion continues to sink in. I'm not going to go through this. I'm going to put a copy here, and you can pause the video and read it yourself. But the gist of it was that the FT was saying gold is finished. The central banks have our backs. Inflation has been tamed. Yes, at the end they say, whatever the speed, the direction is clear. Gold is on its way out as an investment and a reserve asset. 3 cheers for that. I read that before I got on the train. And at first I was like kind of outraged and a bit angry. But then I realized this is rubbish. They haven't done their homework. And I even thought this is like fake. So it was my first experience with fake news. So what I did when I got to work, and at the time I used to work for Men Financial, which later on became MF Global. They did an IPO. I went to the mail room. I had cut the editorial off the paper, and I had it laminated so that I would always have this here. Of course, I can probably get an old copy of it, but I had this. And I wrote here the date, excuse me, and the price of gold, and it was $400 and 65 cents. So how come the EFT got it so wrong? Well, because the EFT is an arm of the banking establishment, financial oligarchy establishment. And one thing they hate is the public to not be in their fiat currency system, in their debt-based system. They want you in there. They don't want you protecting your wealth. And that's why they do it. So what we have now really is going dollar. The pointlessness of holding dollar continues to sink in. That's what it's all about now. And why do I think gold and silver, for that matter, are now accelerating so much quicker, so much higher? Well, I told you about the Bernanke speech. I warned colleagues, family members, friends. Most of them didn't really want to listen to me or didn't take precautions. Some of them did. I had some very two or three, friends that I can count on one hand at work, colleagues that, yeah, they saw this as well, and they became gold bugs, and I still talk to a few of them. They're really good friends. But even people who thought differently, who knew that QE was a disaster, because QE is basically money printing, and I did a little bit of research. So the major central banks of the world, from 2008 until now, until the peak really, they printed 25 to 30 trillion dollars out of thin air. Yes, and the Fed did about a third of that. They went from 800 billion, their balance sheet, to almost 9 trillion, excuse me. Japan's still at it. And who knows, maybe the Fed will start printing again.
The illusion of wealth created by decades of debt and excessive money creation is being exposed by gold, according to Mario Innecco, who warns that we are at a pivotal time. He says that the $30 trillion that central banks have created since 2008 has inflated the so-called everything bubble, creating a false sense of wealth for consumers. However, as fiat currencies depreciate, governments covertly shift the cost of their poor management to the public through currency devaluation, while regular people suffer from increased living expenses, declining savings, and diminished purchasing power. By 2026, trust in major currencies such as the euro, dollar, and yen has declined. Because of unmanageable debt and careless monetary policies, savers are starting to doubt the fundamentals of the global financial system. The consistent weakening of the US dollar over the past year could be an indicator to the end of its hegemony. Gold has, however, jumped beyond $4,000 an ounce for the first time, and some analysts predict that as investors flee for protection, it may hit $5,000 by the end of 2026. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
I think we're deep in that catastrophic moment for the system. The primary reason to own gold is that it maintains value, especially during times of political, economic, and currency-related crises or crisis. In short, it operates as insurance that includes, but is not limited to, insurance against political uncertainty and economic disorder, as well as insurance against the whims of central banks and their tendency towards money printing. So now let's go to the section where I think we find the reason why we're seeing what we're seeing now. And it's on page 70. And it says gold is a revealer of falsely stated wealth. Remember that 25 to 30 trillion dollars of QE I mentioned to you? Well, that's falsely stated wealth that has also spewed over, if you want to call it, into the biggest financial bubble the world has ever seen, right? And we're still... the everything bubble is still there. I mean, the NASDAQ is at all-time highs. But so it's a massive bubble. It's not just that 30 trillion. You have to multiply that 30 trillion many times over because this system uses a lot of leverage. So when wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. The depreciation is borne by the citizenry who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate equities, affluence. As expense runs out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. I would add here that you can own real estate, farmland, without leverage. And I think that does maintain some of your wealth, even though it's not that liquid in a crisis. But anyway, let's continue. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which once bought certain things no longer does. But wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e., debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. Government passes on the mismanagement of economic affairs to its citizens by devaluation. Well, that's what's happening right now in spades. And gold is telling us that, and silver. And many people, unfortunately, especially the middle class, are going to be left penniless. Yes, they'll have balances in their bank accounts, in their savings accounts, in their holding of government bonds, in their state pensions, but it will buy nothing. And that's why you really do need some gold and silver to protect you financially. And it's still not that late to do it, in my opinion.
Mario Innecco presents a gloomy assessment of the current state of the global financial system in his most recent talk. He thinks that the monetary system is now approaching what he refers to as a catastrophic moment, when the delusion of affluence that has been produced by unending debt and money creation is finally coming to light. Innecco asserts that protection, not speculation or financial gain, is the main justification for gold ownership. Gold serves as insurance against monetary, economic, and political disasters, as well as the careless actions of central banks that continuously devalue currencies through excessive liquidity and quantitative easing. Innecco explains the current situation quite well. The $25 trillion in quantitative easing that has been injected into the world economy since 2008 has produced fictitious wealth rather than actual value. He refers to it as the everything bubble since it caused asset prices for stocks, bonds, and real estate to soar. Although markets like the Nasdaq are at all-time highs, he notes that these gains are mostly fabricated and driven by debt and leverage rather than actual production or long-term growth. According to Innecco, governments spread their own financial difficulties to the public through inflation and currency depreciation as a result of poor management and excessive spending. In the meantime, the claims of financial stability, such as pensions, social benefits, and real estate wealth, are progressively being shown to be false illusions. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.